Welcome, everybody, and thank you for joining us today. This is a continuation of our virtual event series with true industry thought leaders. Today, we're taking an in-depth dive into, I think, what's really become one of the hottest topics for cannabis operators across the nation. You know, how do I deal with some of the challenges that maybe my business is currently facing for many operators? And is this the time that I should be looking to sell my business, or is this a time with unprecedented opportunities and maybe I should be looking at buying another business and growing my business? To add a little color to this for a broader audience, the cannabis industry, as everybody knows, has been growing rapidly. And while there's a lot of opportunities, it's also highly volatile, and heavy taxes and some other challenges are really creating heavy burdens for many companies. And with the continued failures to pass safe banking or any form of meaningful legislation at the national level, we're going to see continued challenges in this landscape for operators. How will this evolve? If you're an operator looking for an exit, what's the best way to determine if it's the right time to buy or sell? And how can you leverage your position to maximize your potential opportunities? Well, good news. Today, our expert panelists are industry leaders in M&A and financing activities. And we're going to talk about what's involved and how you can approach an exit or other M&A opportunities for your company, and how to best evaluate when it's the right time to sell, what the marketplace will look like in 2023, and how the industry challenges will affect the opportunities that you might be considering. So joining us today are two industry-leading experts. First, we have Mr. Sanders Zagzebski from Clark. Did I say it right?
Got it.
Okay.
Thank you.
Thank you, from Clark Hill. And Sanders is a partner in their corporate practice and co-chair of their very large and established cannabis industry group. He's a transactional corporate securities lawyer that helps guide general business matters, but also represents clients in complex mergers and acquisitions, dispositions, and other change of control transactions, joint ventures and strategic alliances, debt restructurings and workouts, and capital raising transactions, which can include private and public offerings of debt and equity, and including venture capital and PE or private equity investments. Jason is the director of real estate at Cannabis Real Estate Consultants WeCann, which is a leading cannabis M&A firm, real estate and financing firm. And Jason's got great experience working through large and complicated deal structures. And his experience in transactions offers really great insights about what's happening in the current market and things you need to know to have a successful deal. My name is Chris Boudreau. I'm going to be the moderator for our event today. I'm chair of the board of directors for the Cannabis Chamber of Commerce, and myself, a former banking executive and a cannabis operator who's had 4 exits and license operations in multiple states. I have operational experience actually in retail, stores, deliveries, manufacturing, cultivation, distribution, and testing. And I currently have a cannabis technology company that's an all-in-one tool for customer marketing, customer service, and customer experience. I'm also launching a new cannabis business myself and a cannabis securities company. So altogether, I've got a pretty deep and broad understanding of the cannabis industry and have practical experience as an operator really in all of these aspects that we'll be covering today. So I'm very glad to join these gentlemen, and we appreciate the opportunity to share our thoughts with you. So let's go ahead and jump in. To kick off our first question, let's start with a quick introduction to the current marketplace. Really love to get your guys' take on the cannabis industry and what you think it's going to look like for the coming year. And so, Sandra, why don't we start with you? Please tell us what you think. What does cannabis look like in 2023?
Thanks, Chris. And Jason, nice to see you. I appreciate everybody joining us. What's my take on the industry for 2023? Well, if your primary tool is a hammer, everything looks like a nail, right? And I'm a capital markets M&A lawyer. And so I tend to look at the cannabis industry from a deal-making perspective as opposed to, a product perspective. But so when I look at the cannabis industry, I think it's going to be a little bit choppy, right? In other words, a lot of cannabis companies have raised money. You got a lot of debt. A lot of debt is coming due, or companies are not in covenant compliance in debt instruments, and so they are having to figure out how to deal with a challenging environment from a capital raising perspective. From a mergers and acquisitions perspective, the challenges in the capital raising environment kind of bleed into the M&A side of the business, because many of the deals that we're seeing, in fact, I might say most of the deals that we're going to see in 2023 are going to have some sort of distressed element to it. In other words, buyer, seller, or both are challenged from a capital perspective, or are needing to do a transaction in order to pay down some debt, or are an opportunist seeking to take advantage of the fact that others are in a difficult situation, and they can use their stronger balance sheet in order to improve their position for in the mid to long run. So I think that is from my perspective, from a capital markets M&A perspective, that's what the industry is going to look like in 2023 and probably into 2024. I do think you're going to see a pickup in some larger deals, most of which had been on hold because folks have, to a large extent, sort of keyed their enthusiasm around the industry on policy. Will safe banking finally pass? If there's excitement, then suddenly there are people that are coming in and thinking, okay, things are going to come back. Or the Climb Act, which I've spoken about a number of times, which was introduced in the summer. Those sorts of things have generated excitement. But as you mentioned in your introduction, Chris, so far it's been a bit of a disappointment. SAFE still hasn't passed, right? Climb hasn't really gotten off the ground. And so I think a lot of folks were holding their breath through the lame duck session in Congress to see if something would happen. There was a lot of chatter about SAFE or SAFE Plus passing in the lame duck session, and it, of course, did not happen. And of course, as well, from a policy perspective, it's not like the government doesn't have other things to think about with, the war in the Ukraine and spy balloons and UFOs landing over the Great Lakes or whatever it might be. And so I do think now we have a number of businesses, including some of the larger ones, that are going to need to do something, right? They had been holding out, hoping for some good news out of the policymakers in Washington. That good news was not delivered, and so now they have to do something. Standing still is not really an option. So I do think we're going to see some of those deals, possibly some going private deals. Very likely going to see, as we talked about before, Chris, some new money coming in the form of distressed funds seeking to take advantage of it. So I don't think it's not bad news per se, but it's choppy. It's going to be, it's not everybody just, it's not the party that 2019 was, let's just say, or the first half of 2019.
Yeah. I mean, I think the public markets are a good reflection of that too. I mean, we saw, depending on the company in general, among the larger companies, we saw a 75 to 90% decline in most of the market caps of the public companies between kind of mid 2020 or mid 2021 and 2022. Well, Jason, please tell us your take as you look at the cannabis landscape. What do you perceive 2023 is going to look like for cannabis?
Well, thank you for the opportunity. It's good to see both of you gentlemen. I thoroughly agree with everything that Sanders said. But, in terms of this year, I think that the state you're in is really, or the state that you're focusing any particular cannabis business in, is going to dictate, what you can expect. I think we're going to see a lot more real estate acquisition and licensing and entitlement, obviously, in the emerging younger markets like New York and New Jersey, New Mexico, Arizona, states like that, and others. But, further mergers and acquisitions should continue to occur in California and Oregon and Michigan and Illinois. Those more mature markets. Those M&A deals are, difficult to get done for the reasons that we'll discuss, and many of which Sander outlined. I definitely agree that receivership is going to become even larger this year in 2023, along with foreclosures. But that's really, again, more in the mature markets, especially here in California, where we're seeing, we're seeing a real increase in receiverships and foreclosures. We're going to see more rising interest rates, potentially. The Fed has continued to raise rates, and that's increased the cost of capital across the board. So the interest rates that are being charged now on cannabis loans, whether it's for real estate or business, are increasing. This is obviously going to affect the value of cannabis companies and what somebody can pay for a business or a license. I think also this year we're going to see a greater focus, more increased focus on creative branding and marketing measures, companies trying to separate themselves from the fray or from the rest of the other companies, and I'm seeing some inklings on various ways that might occur. In California, I think delivery is going to get a lot stronger now that these delivery vehicles can hold a lot more product in their vehicles, and the ice cream truck model might well end up changing the profitability of many cannabis businesses who will have a greater ability at a lower cost to deliver their goods to the consumer. I think lounges are going to continue to become more and more prevalent. It's been my view for a couple of years now that that's a future trend that we should keep our eye on, that being consumption lounge licenses being sought at, any type of retail or entertainment or destination type location, right? Whether it's a wedding venue or a nightclub or a concert venue or a restaurant, much like alcohol, cannabis will be sought at all of those particular types of events or locations. But mainly, I'd really ideally hope, and I'm going to stay positive here, that we're going to see proper regulatory and tax changes at every level of government, whether it's local governments, state governments, or most importantly, the federal government. There's some really easy changes they could make, and I'd really like to see those changes be made so that those operators who've invested their own hard money, their own hard-earned money into these businesses can really start to see some proper returns.
Well said. Well said. Thank you both. That's really great insight. And so in these challenges that you noted, or that you both noted, and I think everybody in the industry recognizes that it's unfortunately a tough period, and it's going to be a tough year. Many groups are considering selling, and M&A is a term that's used. Not everybody knows exactly what that means. And so to offer a little clarification, mergers and acquisitions can actually refer to a number of different activities. But in a very simple way, M&A refers to basically buying or selling or restructuring your corporation. And so there's three main categories of company that this might fall into for the audience. One is an existing cannabis business looking to sell all of their businesses, or if they have multiple operations, maybe just selling some of their licenses. This could also be an existing cannabis operation looking to acquire more operations. Or the third option is a group looking to enter the cannabis industry. So keeping that perspective in mind, let's talk about M&A a little. Can we walk through what it would be like buying or selling a cannabis business? And Jason, you manage a large flow of transactions. Can you walk us through what's involved when someone looks at buying or selling a cannabis business from WeCann's perspective?
Sure. It kind of depends whether or not you're a buyer or a seller. I think we all would agree that it's a buyer's market out there in the M&A world. And if you're a buyer that's looking to purchase a business, you've got a lot of options to choose from. The biggest pitfall for you is going to be deciphering which of those opportunities are the right one for you, and that can be daunting. Sellers, on the other hand, should be really focused on understanding A, that it's a buyer's market, and B, what is the valuation of their business. And there's lots of different ways that we can look at that. But the asking price is a really key point in gaining a successful transaction, right? If the business is properly valued, then we stand the highest chance of getting as far down the process as we can with the prospects that our firm interacts with. We do a lot of marketing. It's whole and consistent. And we have a steady stream of leads coming in throughout the country for various consulting purposes. So we have the leads. We are pushing them forward as much as we can, but valuations of these cannabis businesses are ever changing. Every 6 months, you really need to take a look, in my opinion, at your business against what's out there that's being listed. And the best way for you to understand if you have something that's worth selling is to meet with a consultant and have them analyze your market and the competition that's around you and the taxes that you're paying and your branding and marketing, your bottom line, your top line in terms of revenues, and how that's going to look on the open market. It's it's an interesting process, and one which just really requires that the seller really understand everything about their business and be complete and whole with their broker on what those items are, so that we can put our marketing together in the most effective way to price it correctly and get it to market and get the best offers we can.
Okay, thank you. And so as somebody is negotiating through a deal, can you walk through that a little bit? So let's say, so they get their financials together. It sounds like you're saying, they help guide you with some talking points on the business. They make sure they get a good valuation, a reasonable valuation. And we'll talk about that in just a minute. How do you come to that? But we'll get to that in a second. But they work with you on evaluation. They get those pieces. You start marketing it. What's next?
So generally, our sellers and we want to require that NDAs get executed so that we can disclose sensitive information about the business. And once that NDA has been disclosed, then our NDA has been executed and the due diligence has been sent out, then we started having more in-depth conversations to justify the valuation and to discuss, what kind of terms might be available in this particular transaction. And the terms of payment are, in my opinion, as important, if not more important, than the value itself. Because of the difficult nature of capital right now for the cannabis industry from investors and from lenders, a lot of the lending is getting done in the form of seller carryback. We're seeing a lot of stock options get thrown around, and I know a lot of sellers aren't necessarily interested in that. But the discussion will become one of, how are we going to put this together and at what price? And oftentimes we're seeing a lot of joint venture type discussions where the buyer and seller are able to realize that they have a common goal and that they meld well together. And that's something that I like to do after I've gotten to a certain point with a buyer prospect on a listing of ours, especially if I've seen a proof of funds from them to show that they're ready, willing, and able, is to go ahead and put the buyer and seller together. Sometimes as a broker in this market, it can be a little bit difficult to relay all of the conversations perfectly. And I do a really good job of that. I pride myself on being an excellent communicator, but deals are going to get done when the buyer and seller are really able to look at each other in the eye and feel a level of comfort with each other, look under the hood as much as they can, and come to terms both on price and the terms of payment and whether or not they're going to get into a joint venture. So I like to think of it fairly holistically, but also as the type of process where the sky is the limit. Nothing is necessarily off the table unless, of course, one side or the other has said, look, I'm not going to do stock. I'm not interested in a joint venture or X, Y, or Z. I'll know that. But it's really important, in my view, that buyers and sellers, keep their options open. If they're really serious about getting a deal done in this market, you're going to need to be as creative as possible.
Sure. Okay. Fantastic. Thank you. So Sander, as Jason noted, daunting is a good word, right? And I think the legal aspects of these kinds of transactions can be both daunting and incredibly complicated. Can you give us kind of a simplified breakdown of that walks us through, what are legal considerations and what does the process look like in an M&A activity or an M&A transaction?
Sure. I mean, as a basic concept, and as you mentioned earlier, there's a lot of different things that you can refer to as M&A, right? I mean, it stands for mergers and acquisitions, but we lawyers and investment bankers typically think of M&A as a change of control transaction. So you're the primary ownership group of one company ceases to own, the control position at the end of the transaction. So it can be as simple as an all cash deal to buy all the equity of the entity, the LLC or corporation that owns your operating entity and perhaps your real estate, or it can be a more complex JV, strategic alliance type deal where cash doesn't even change hands, but it's still a change of control transaction or a combination of control. And you generally have two groups of buyers in an M&A transaction. You have financial buyers and what people consider, strategic buyers. Financial buyers are just primarily looking for the financial return. These are folks that run private equity funds or venture capital funds, and they go out and get money from people who are expecting a nice return, and then they go to a dynamic industry like the cannabis industry, expecting to exceed those returns because if they can, then there's enough money to get themselves paid in the process, right? Strategic buyers are different. Strategic buyers are folks in the industry that are looking to grow or accomplish a industry-driven strategic objective in making an acquisition. So it all comes down to money eventually, but strategic buyers are usually considered to be buyers that will pay more and do more negotiations around the terms because their objectives are not entirely financial. And in the current environment, you just don't have a lot of financial players. So in this process, you are probably going to be dealing with a strategic buyer because the financial people right now, frankly, have found another place to stick their money. You know what I mean? And so what might those terms look like? I mean, the process from a legal perspective, you don't go and hire lawyers, thankfully, to negotiate the price of your deal. You hire folks like Jason for that. But what we do is we do a few things as lawyers in an M&A process. First, we kick the tires pretty hard. We look at the other side of the transaction. Typically, the focus is paid to the seller, but there are reasons why it's not always just paid to the seller. But you're looking at the seller, or you're looking at the target company. You're looking at their cap table. Who's going to get the consideration? You look at their operations, you look at the liabilities they have, you look at the potential contingent liabilities, where they might have some problems, where they might have some litigation or risk of litigation. You're looking for the skeletons in the closet, if you will. In addition to that, you are looking at deal structure. So the M&A space, a lot of what you're doing, particularly if you're not just paying everything in cash, you're looking at the tax consequence of the transaction. Is there going to be a tax? Is it a taxable transaction where even if what I'm doing is I'm buying control of your company for stock, if that's taxable to you, but you don't have the cash to pay the tax bill, that might be problematic. And so we bring in the tax lawyers to try to structure it as a tax-free reorganization so that you don't have to pay taxes on the deal consideration you received from me until you have liquidity, until you can turn that deal consideration into cash, right? And a lot of negotiation surrounds the deal structure and the deal consideration, right? I mean, in the extreme case, if I'm buying you for cash, well, that's a pretty easy deal to negotiate. You know what you think your business is worth. You have, an investment banker or consultant. So you've gone to Jason and he tells you what it's worth and he runs some numbers and analysis. And if I come in with cash, okay, a deal may be easy to get done. On the other hand, if I'm coming in with my business and I want to combine with you, and what I'm offering is not cash, but I'm just offering securities of my business, right? Equity securities or some combination of equity and promissory notes. Well, now it's a little less clear, right? How do you know what I'm paying you is worth what I'm telling you it's worth, right? I can buy every business in the world if you agree to take magic beans that we all agree are worth hundreds of millions of dollars, right? It comes down to those terms. So the lawyers, again, lawyers don't typically get involved in the actual calculation of deal value, but we do spend a lot of time talking about deal terms and deal structuring for those reasons that I mentioned earlier. And then finally, we deal with, in addition to these other kind of these due diligence issues, you deal with all of the things that sort of stand in the way of getting a deal done, what people don't like to think about. For example, third-party consents, right? If you have, most people have a lease, most of those leases will require your landlord to say it's okay to do the deal. So landlord consents. If the deal's large, sometimes you have regulatory consents. I've done a couple of Hart-Scott-Rodino filings in this space. Hart-Scott-Rodino is the antitrust filing that you have to make with the Federal Trade Commission and the antitrust division of the Department of Justice for deals that are very large. And it's a little ironic, by the way, that for a federally illegal business, we need sometimes to seek federal approval in order to get the deal done. It's not nearly as ironic as the fact that the people that scrape the most profits out of an illegal cannabis company is the IRS through 280E, right? So we live in a fun time. In addition to those regulatory hurdles, sometimes very often there's regulatory approval at the state and local level due to the cannabis regulations, right? Often, every state and most local jurisdictions have a different process, a different set of rules. So your lawyers have to go and figure out how do I do a change of control on my license under the rules of the state of Arizona, for example, or the state of California, and potentially the local rules as well. So all those things, they're not fun to think about, but they do impact the deal and the timing. And these are things that lawyers should be on top of quickly in a transaction in order to let it run smoothly. And then finally, you have to deal with consents that might be required under the actual cap table of the target itself. Lenders, if they exist, lenders almost always are going to have some sort of approval right. If you have preferred equity investors, very often, I would say most often, they're going to have an approval right over the transaction. So you need to make sure that everybody who has an approval right gives that approval at the proper stage of the process. And so that's kind of, roughly speaking, what we do. Now, let me just go back to the asterisk I put into my comments a few minutes ago, which is you typically, but not always, just focus on the seller, quote unquote, or the target. So if I'm coming to you as a buyer and the primary consideration I'm paying to you are securities in my own company, well, guess what? You as the seller become an investor in my company. And so you would be well advised to do your own due diligence on your buyer, which is a little unusual. And in a lot of, in the M&A context, buyers tend to get a little bit grumpy sometimes when you turn the mirror around onto them and say, hey, you've sent me a due diligence request list. I'm going to do the same to you. But in fact, that is something you are highly advised to do if what you're doing is getting paid not in cash, but in stock or securities of the buyer. And let's say it's not a complete change of control transaction. Let's talk briefly about joint ventures and strategic alliances, which is kind of a miscellaneous category of what people consider to be M&A alternatives. So when you have parties that don't agree on value, for example, I'm not going to buy you at the price you think you're worth, and you're not going to buy me at the price I think I'm worth. But we both agree that strategically it makes a lot of sense for us to work together. Well, that's when people start looking at alternative structures. They look at a joint venture where we work together in pursuing this particular business, and maybe we defer to a later date the idea of actually combining through an M&A process. But even in that process, what you're doing is you're creating a new business venture with this other company, and you need to think through and do your own due diligence on them while they're doing it on you. Even if you're the seller. And I do think, by the way, we will see more of those types of transactions right now because, as we've said several times in this call, this is a challenging environment for cannabis. So when it's a challenging environment and people they don't have necessarily the ability to do the deals they want to do just in cash, you have to start thinking about doing them the hard way.
Yeah. No, those are some great insights. Thank you. And I think the joint venture is something that we hadn't thought to discuss today, or I hadn't, but I'm glad you brought that up. So you both touched on valuation. And I think that's probably, everybody's biggest concern, right? The most important question in the room is valuation. And so I wanted to get you guys' perspective on, and Sandra, it sounded like you deferred to Jason on this a couple of times. So I don't know if you have as much thought on this, but
sure.
If you guys have some,
I'm always willing to share my opinion.
Yeah, please. If you guys have some perspective on, what's the best way to approach valuing a company, please share. Jason, do you want to go first? Or?
Yeah, but I wanted to say something about the due diligence on buyers. It is incredibly important, and I would say across the board, partly because, even if it's not a joint venture type agreement, the likelihood of there being payment tranches or seller carryback are, nearly 100%. So you really need to understand who that buyer is, and that requires due diligence of the buyer and their experience and, their capital and the whole nine yards. But it's also important because the licenses, the businesses themselves often have restrictions placed on the transfer, right? At the state level alone, there's that 80-20 rule where that remaining 20% can't just transfer right away. And then every municipality in the state of California has got its own rules on that. So it's really important, the due diligence. But in terms of valuing cannabis businesses, yes. So if it's a business versus a license or pre-operational business, there are different factors to consider. If it's a profitable business, then we're going to look at both their gross sales or their top line number and their EBITDA, which we could refer to as a bottom line, but it's not truly a bottom line. If we're looking at gross sales, for instance, of a retail business, you're going to be looking at, let me just clarify, gross sales being gross receipts minus the excise taxes at the state and local level. But your multiplier of gross sales is going to be on a profitable business as low as 0.5 and as high as 1 times. I'm not really sure that 1x is really applicable anymore. But the deals are as low as 0.5. On a multiplier of the EBITDA, you're generally looking at valuations of 4 to 5 times. A lot of these cannabis businesses are 10 to, I've seen as high as 20, even 25% profitable at the EBITDA line. But you have to be really cautious about those numbers because we're looking at P&Ls that may or may not be audited. And we've really got to understand as brokers and buyers, what exactly is in those lines and ask the right questions so we can really boil down that valuation based on income as well as we can. And those multipliers have changed a lot over the last several years. There was a time a couple of years ago when the gross sales multiplier was as high as 2x. There were not a lot of sales that got done at that level, but they did get done. And I think a lot of the reason why they got done is the businesses were very young. There weren't necessarily years of financials to look at that EBITDA line and really understand the proper or the true profitability of the business. So we were using this top line number and it became a kind of a mechanism. But as companies became more solidified in their actual profitability, now it's become more regular or standard to see multipliers of the EBITDA. If it's a non-profitable business, and this is pretty much the same for a non-operational business, it becomes very speculative. Valuation is fairly speculative when it comes to cannabis business valuations to begin with. But if you're looking at a non-profitable business or a pre-operational business, there's going to be comps out there. They're not something that are readily available that anybody can just go and pull. We have comps. We know where deals are getting done, whether we close them or not. And we have a good understanding of what various license types are going to be worth. But a few years ago, in I think early 2020, maybe it was late 2019, I created what I call the cost plus X approach to valuations. And I had to create that because buyers were asking me, hey, how'd you get to this valuation? And I would explain it to them and it would be a full answer. And then they'd ask me the same question again. And it was a very circular conversation. So I decided, you know what? I'm going to justify pricing based on cost. And if it's a pre-operational business, then that cost will change. And the cost also included like a nominal valuation or number that I put onto the partner or the owner's time and energy that got put into it. And then X was obviously something that would get added on and in some cases subtracted off. And that would give us a real justification of the value, because anybody else they wanted to acquire a business like that, if they wanted to originate a new license, would have to go through something very similar in that particular city. Now, I would not say that it's cost plus X. It's probably cost minus X. We're looking at 20 to 50% of cost these days as it pertains to pre-operational or non-profitable cannabis businesses. And that's can be hard to swallow for a lot of operators that are looking to sell. But that's just where the industry is. There are receiverships and desperate sellers out there, and the buyers are out there pushing them down as much as they can. The issue is, as Sander had alluded to, some of the debt that these operators have and getting the approval of a lender, whether it's on the real estate or the business or the equipment, that can be a real difficult mountain to get over when you're trying to sell your business. And it's an incredibly important part of getting ready to go to market is perhaps talking to your debt holders and talking to them about, hey, I want to sell. I'm seeing this on the market. My broker is telling me that I'm only going to be able to get this much. What's going to happen if I can't pay you back, right? You got to have those hard conversations. You're a lot better off having those conversations early so that you're not potentially blindsiding them and putting yourself behind the eight ball when you're getting close to a point to close. But the various license types, right? Distribution, manufacturing, cultivation, retail with delivery or just delivery on its own, or perhaps a testing lab, are all going to have their own kind of market for pre-operational or potentially non-profitable businesses. And I'd have to really look at a business and understand what licenses are there, understand what kind of cost went into it, understand the debt that's on it, and try to create a value for that business that's going to be attractive to the market. Because if we go to the market with too high of a number, it's just going to be a waste of everybody's time with all of the various options that buyers have in front of them. But as an example, in the last 12 months, we sold an operational but not profitable delivery, and we got that done for $175,000. Not a huge amount of money. And that particular operator, had to get out. She had real reasons in her family life why she was getting out, and that was okay for her. We sold a cultivation that was, about ready for build out for $150,000. Have a executed LOI for a distribution here in Southern California at $200,000, but I don't think it's going to get done because the landlord is being combative. So, it just kind of depends on the situation and what the buyer and seller are willing to do.
Just to jump in really quick to add a little color, you've heard Jason mention it a few times. You've probably heard it in other places. Sandra might mention it as well. There's a cash flow measure when looking at businesses that is an acronym. It's commonly called EBITDA. And it's earnings before interest, taxes, depreciation, and amortization. And that's all it is. But it's functionally just a measure of what's the cash flow look like in this business. Because you could do some tricky things with taxes and with depreciation and amortization. And so you might have a little more cash flow there than it looks on paper sometimes on the tax returns. So Sandra, please, do you have, what's your perspective on how to value a business?
Well, I have a number of perspectives, and, keep in mind that people go to law school because they don't want to have to do math. And so, but biggest issue to start, and Jason touched on as well, was that, are you looking at historical numbers or are you looking at projections? If you are pre-revenue, the only thing you can do is look at projections for the future, and projections tend to be optimistic, even in the worst case scenario, right? So if you are looking at projections, then is it projected EBITDA? Is it projected? What are you projecting, and then how are you arriving at a value? The bankers like to do a discounted cash flow analysis, which when I was young, I saw it referred to by a investment banking commentator as the mother of all crocks of shit. So that'll give you an idea of just how much game playing you can do with projections. But to be serious about the response, projections do matter, right? Again, I mean, you need to have a sense of where you're going to go. Buyers will look at projections, and it's just that historical numbers are a better gauge of future performance than projections most of the time. So if you have historical numbers, that's usually a better place to be starting from. I just look at it and I say, most companies now try to get valued on a multiple of EBITDA, adjusted EBITDA, by the way. You always monkey with that definition a little bit in order to arrive at what's thought of as a real cash flow number. And the multiples that Jason threw out there, right? Single digits, right? 4 or 5 times. Those are not particularly strong multiples versus a market that's more robust, right? A lot of other industries right now, even industries that are kind of boring, will have 7, 8, 9, 10 times EBITDA as kind of a standard multiple for transacting businesses. So it does tell you a few things. Number one, cannabis valuations have suffered. And then number two, it's more likely that you're going to be getting a better deal from a strategic buyer than a financial buyer, if there even are any financial buyers out there looking at your business. What I like about the strategic discussion, by the way, is you don't always necessarily have to come to a bottom line on valuation. Oftentimes you can come to a meeting of the minds by dealing with relative valuation as opposed to actual. So in other words, if it's two companies that are both private, it's, exhibit A would be PharmaCann Live Well, right? Neither one of those companies was public when the transaction happened. So you can't look at a public market. And I had some involvement in that deal, so I'm not going to talk about anything that's not public knowledge. But when you have transactions like that, you don't necessarily need to say, hey, I'm worth X and you're worth Y. We just need to have an agreement on what numbers matter and how the valuation of the two of us relative to each other can be calculated. So strategic acquisition sometimes can move more quickly in that regard because we don't necessarily need to decide what that multiple is. We just need to look at my EBITDA and your EBITDA and kind of work the cap table based on that ratio. So, but I think look, it's very obvious that valuations have come down. This isn't 2019, early 2019, the MSOs that had just gone public and had a war chest of cash were buying anything that wasn't nailed down, and even bidding on the stuff that was. And so, that it's going to take a while to get back to that world. Most people that aren't that don't need to sell, in my experience, aren't selling right now, right? In other words, most people are perceiving this as a particularly tough time, so they don't have to do a transaction. They're unlikely to do it right now, with the possible exception of saying, hey, I'm in pretty good shape. Jason's in pretty good shape. Together we'll be in really good shape. And, we can go out and expand. So those types of conversations are happening now that were probably not happening, frankly, last year. But the real sellers are people that are having to sell because they're being pushed there because they're out of covenant compliance, for example, with a lender or something like that. And so they need to sell off some assets, pay down some debt, and whether they like it or not, they have to be in the market. So hopefully that's a semi-informative answer. I mean, I can't tell you that the actual multiples. I would defer to Jason. He sees it every day. But what I would say is, the choppiness is going to last for a while. And if you can survive, you probably aren't going to be out there looking to sell in this environment, because right now it is a distressed environment in most areas, other than a few markets that are generating some excitement, like, New York, for example.
Right. Can I touch on what Sandra was saying about projections? I would agree that projections can be important as a guide when we're valuing businesses that are pre-operational, but it gets just even more speculative. And I have not seen, a pro forma type P&L be used in any truly meaningful way to get to evaluation. But you're right. It is an important part of the process, right? Hey, I got this great opportunity for a retail storefront where there's only one other dispensary and a decent population and demographic. This is a pretty solid pro forma. But that said, a lot of experienced operators, perhaps the more strategic buyers, and I love that separation that you delineated, Sander, would be more apt to consider that. But those are great points, and I just wanted to throw that in there.
Yeah, I mean, look, projections. Everybody kind of rolls their eyes at projections, but you have to start somewhere, right? I mean, everybody projects revenue, so you can send me projections and I can criticize them, but what I do think, though, and that's, right now there aren't a lot of financial buyers on scene. A few years ago there were, right? I mean, there was Russian oligarch money coming in. That stuff is definitely gone. But you know what I mean? So exactly, and so it really and projections to a strategic buyer may still be looked at with through a magnifying glass, but they're still going to want to start there, and a good strategic buyer, particularly if you're a seller with some experience, right? If you have a new location, but you've built up 3 or 4 locations over the last few years, and so you have a pretty good sense of what this location is going to be able to do, and you're talking to an experienced strategic buyer that also can look at the same footprint with you and say, and have a pretty good idea of what the performance of that location should be, then you can come to terms, I think. Again, it's not perfect, but without the financial buyers in there to just provide some alternatives, that's really where I think the conversations are going to be for the next year and a half. Incidentally, at the risk of slightly changing the topic, we have seen people exit some markets, right? I mean, a few weeks ago, Curaleaf announced that they were getting out of all the Western states, including California. And Curaleaf came into California 2019 by buying Select for, at the time it was announced, it was just shy of $1 billion, right? And ultimately, that deal got hung up in the Hart-Scott-Rodino reviews that a number of our deals were hung up in. And I was involved in that transaction. I was involved in another one at the time that was in the Hart-Scott-Rodino review process. And so everybody from what was the MedMen PharmaCann to the Curaleaf Select deal to Harvest Verano, et cetera, they all got stuck in this process. Well, Curaleaf Select did close on revised terms, and it wasn't 900 something million, but it was still a very significant deal value when it closed. And so for them to exit California, that's a pretty significant decision on their part, right? And reason I say it in this way is they're obviously making a move. They're consolidating in the more profitable states. Others might make similar moves, and over some period of time, the people that can hang on, that do have good businesses, that are disciplined, they're figuring out how to make money. Ultimately, the economics will shift again, right? The people that get out of the market close down their operations, that supply and demand dynamic is going to find its way into pricing, and you will see some pricing power again. You will see things get better, and at that point, then the conversation shifts to more opportunistic acquisitions again, and maybe even some financial buyers.
Yeah. So we're running up against the clock. We want to leave a few minutes here for questions and answers. We already got one. So let me open this up. If anybody out there has a question, now is a good time. Please click on the Q&A and submit your question. And while we're doing that, while we're giving people a minute for that, I'm going to ask you both one last question. Try to keep it to a minute, just something real quick in a summary. Is there any significant risks that you can identify? Just kind of a quick, like, hey, you know what? Make sure if you're working through a transaction, you're considering this, or you're looking at this, or any other advice that maybe you might have for our audience.
Sure. If we're just talking about really serious risks in a quick little tidbit, it's incredibly important for buyers when they're looking at a potential acquisition to really look under the hood as much as they can. There are cases, obviously, where there were undisclosed liabilities or litigation or potentially bad press that related to the company that they are acquiring. I think it's also really important to understand and get ahead of hiring a quality attorney, much like Sander, to draft those management services agreements and operating agreements that are going to need to be in place, and understand the kind of cost that's going to go along with that. A lot of buyers and sellers don't anticipate that going into a transaction. It's not that it's always necessarily a really expensive part, but it can cause some delays, and is a big part of the reason why when I'm negotiating deals, I prefer to always use a binding letter of intent so that we can open escrow, get the deposit in, and then have the MIPA, the Membership Interest Purchase Agreement, or the Stock Purchase Agreement, along with the Membership Services Agreement that would allow the buyer to take control while equity is being transferred, be drafted by legal professionals, and to make sure that you've got a legal mind on your side, because I'm not an attorney and I don't pretend to be one. I have great attorneys that I can refer to, like Sander, but it's really important that you have a proper attorney on your side to manage those particular pieces.
Awesome. Thank you. Sander, do you have any quick?
Well, real quick, when times are tough, the terms and conditions just matter that much more. And so are there risks? Yeah, there's significant risks, right? And as Jason mentioned, seller financing is happening in most deals. So if you're taking back a note, you got to know, are you secured? Are you unsecured? Where do you fit within the priority? And really have a comfort level of, are you ultimately going to get paid on that instrument, right? Cannabis companies can't go bankrupt. We have a lot of companies out there that, I kind of refer to them as the dead men walking, right? Because they're choking on debt, and they can't even go bankrupt to get rid of the debt. So it's very difficult. Receiverships are out there to help them manage that process, but it's not as elegant an alternative as you might think it is in comparison to bankruptcy. And so if you're not getting cash at close, and most people aren't going to be getting everything in cash at close these days, then you really have to have an understanding of what is going to get you paid, what your risk is, and that's just a reality. So yes, there's risk, and it's not insignificant, and so you need to think through. We're going to run out of time, so I won't do any war stories, but you definitely need to think through where you fit in terms of payment priority and how confident you are that you're ultimately going to get paid in full on those instruments.
Fantastic. That's great insight. Thank you both. So we're going to go to questions, but just because we're hitting the top of the hour, I know some people are going to need to jump. Really quick, can you both let people know if they had additional questions and wanted to reach out and connect with either one of you? What would be the best way to get a hold of you? And then we'll go into some Q&A real quick.
Sure. You can, we have two websites. We merged our company, WeCann, merged with Cannabis Real Estate Consultants last year. So you can find us at WeCann, that's WECANN.biz or CREC.us. My phone number is 949-682-5867. My email is very simple. It's jason@WeCann, that's WECANN.biz.
Awesome. Thank you, Jason. Sander?
Yeah, you can, primary way to get me is on our website, clarkhill.com. That's pretty easy. And if you just click on the Z, there's only a couple of us with a Z. So my name is pretty unusual. You can even just Google Sander and lawyer, and you'll get me, and you'll get a senior securities partner at a firm in Toronto, who I did a deal with a few years ago, actually. Very, very smart guy, Sander Grieve. So yeah, there aren't a lot of Sanders. So finding me is pretty easy. My first initial, full last name, Zagzebski at Clark Hill, is my email address. You can also just reach me at 213-417-5175 is my office line. But Google, email, you can find me on LinkedIn as well. Any one of those social media sites, and I'm always happy to take a call with questions.
Thank you. Well, let's hop in. We need to be done by. We'll give this about 10 minutes. We've got 3 questions from our audience. Let's try to get through these, maybe 1 or 2 minutes each, and I will let you guys decide who's maybe the best person to answer. The first question came in kind of early from Matt Burlando. Matt asked, in your opinion, will yesterday's Twitter announcement be a significant value accretion event for brands who have a focused and targeted marketing campaign? And I don't know what was announced yesterday on Twitter. Do you guys know?
It looks like Twitter's going to start allowing state legal cannabis businesses to advertise on Twitter. So that's a hard one, right? Because cannabis companies advertise or have social media campaigns, obviously. So the question really is, will Twitter make a big difference in those campaigns? My own view is that Twitter isn't going to move the needle that much because, a lot of companies are already on some of the sites that are more popular with the consumer, Instagram, for example. But it definitely can't hurt. It can't hurt. I think the jury's still out to see whether that's going to have a big difference on valuation.
I might have some perspective on this one. Oh, go ahead, Jason. I'm sorry.
It'll certainly get, considering I think Twitter has become some kind of a perceived left marketing platform, maybe more liberals. But, this does go back to one of the points that we're going to see more creative branding and marketing avenues and concepts this year. And if Twitter is now available to cannabis brands to operate, they're going to jump on it and they're going to take advantage of it, I fully suspect. How much difference that makes remains to be seen. But, in marketing in general, you want to get as many touches as possible with the public to really stay in front of them and get your brand awareness. So I think it'll be a perceived important avenue for marketing professionals across the industry to push out more branding. And I did not know that. So I'm happy to hear that.
As a guy that's been marketing on Twitter, IG, Snap, I've tested all the social channels since probably 2009, been pretty active on most, very active in following the public markets, and having been a public company CEO that did a lot of IR, investor relations stuff through Twitter, because it's a really good channel for cannabis companies, or for most companies in terms of an IR perspective. I would say that I think the announcement, I think they're both spot on. The announcement probably isn't going to move the needle much, but what I think it will do is open eyes and start bringing attention and awareness that can make a bigger shift. So to me, it's a small snowball that's starting to roll down a hill that will probably lead to Instagram or Meta basically reevaluating, okay, we're going to allow this on Facebook, we're going to allow this on IG. And so I think it could be the beginning of something bigger, but I think it in itself is probably not going to be a big one. Daryl Olson asked, what are you seeing in the area of D&O coverage requirements or tail coverage in the M&A process? And that one's completely out of my wheelhouse. So I gotta. Do you guys have any thoughts on that?
Across the board, right? D&O coverage is director and officer liability coverage. You're also probably thinking about reps and warranties coverage in the M&A process. And so tail coverage, so reps and warranty is packages are still very, very difficult to get in the cannabis space. D&O is also across the board. Look, the cannabis industry doesn't have the same universe of insurers as others, and I can't frankly say that I have a good handle on what the tail pricing would be for that. So just for the uninitiated, right? You have a company that has a D&O policy, meaning that if the directors and officers get sued for something they've done that arguably injures investors in the company, then the director and officer insurance policy will step up to provide a defense. D&O coverage is standard among public companies, and in fact, it's easier to price in that context. Far less standard in the private company context, although you can buy D&O coverage. The tail is ultimately if you exit the policy, but you want to have continuing coverage of past acts. What are you paying to your carrier? And frankly, I haven't looked at it other than to know it's on the expensive side, but I haven't had occasion to price it out recently to know where it's gone.
Yeah, I've had it, and in a public company and had an exit. I don't think we were able to get tail coverage at the time. This was 2019 when we exited, or 2020. So,
was that a cannabis company?
Yeah.
Real quick on that note, this sounds like it fits into the concept of risk management, and I think that risk management for larger companies, generally more MSO type cannabis brands will really do well to consider proper risk management. And there are one firm in particular that I know of that we're aligning with to refer our MSO clients to really take a good hard look at how they can set up proper protocols and insurance lines to manage their risk as well as possible in an ever-changing regulatory and tax framework. So I think that's how I would answer that. I don't know a lot about that particular piece and how it relates to M&A, other than to say that risk management is becoming a more important piece of the puzzle for cannabis companies.
So Daryl wrote back and actually said, agreed, haven't seen reps warranties, but do have a couple carriers that offer D&O, with those that qualify mostly reasonable. Not so much tail either, though. Thank you. Okay, so last question from Nona Rangel. Thank you all for your questions, by the way. And Nona asks, if you were a distressed cannabis business, can your tax net operating loss be something to market to potential buyers looking to lower their tax burden in other businesses? I think, so I actually have a master's degree in accounting, so I might be a little more qualified on this, although Sandra might have some perspective from that. I would say that you're getting really specific. That's going to be specific to how you structured things and what the buyer's looking for. And your very specific accounting guidance on that is going to be needed. But
yeah, I mean, when I got started, I'm going to date myself a little bit. When I got started out in the M&A world, people would buy companies simply to buy their NOLs, and the IRS changed the rules to make that a lot more difficult. So if it's a full change of control transaction, in all likelihood, you're not going to be able to attribute a lot of value to your NOLs. But that is, as Chris points out, very, that's a very specific analysis to be done, and it's very difficult to do. So in other words, a couple decades ago, you used to see companies, obviously not cannabis companies back then, but companies that were trying to sell themselves simply to allow their years of operating at a loss to to be for someone else's benefit. And that's just very tough to do these days.
If I heard the question correctly, he was talking about marketing it. I am not a CPA, and I would not suggest marketing that. If you wanted to have those discussions with the buyer once they come in, it could be a value add to the conversation. But any broker or that's pushing out a listing on a cannabis business would be making a huge mistake to advertise, perceived tax benefits of an acquisition, even if they consulted with a CPA. It's still not advised to market something highly specific like that tax incentive.
Well, that's very well said. Very well said, Jason. It's there's too many things on the other end that you might not be aware of. So,
Right.
Okay. Well, hey, that is all our questions today. Fantastic. Thank you, gentlemen, for some really rich insights about, such a hot topic. We thank everybody in the audience for attending today, and please watch for the upcoming video. You can find us on thecannabischamber.com. We have an event section there with the videos. We also have a YouTube channel you can look up and catch this. And for those of you that are in an email, you can get a copy of this. We'll be sending out. Or if you're not on our email, then please sign up again at thecannabischamber.com. Sandra and Jason, thank you so much for your time today.
Thank you.
Thanks, Chris.